The NASDAQ now down nearly 3% in April, below its 50-day moving average for the first time since early November. And joining us now is T. Rowe Price, Global Tech Fund Portfolio Manager, Dom Rizzo. Dom, it's good to have you back on. I mean, it's an ugly day for stocks, but particularly for some of these tech names that I know we usually talk to you about. So I'm going to start right there. The fact that we've seen this sell-off, how much of this is tied to rates? How much of this is tied to geopolitics? How much of this is just profit-taking on tax day, by the way, after big runs in many of these names to start the year?
Well, first off, thanks for having me back, Morgan. I think it's kind of a combination of all three of the things that you laid out. You know, we had many of these stocks up a lot year to date, and sometimes you have a little pullback on some of these names after that happens. We have some profit-taking on price momentum reversals. But if I look at the fundamentals in the digital semiconductor supply chain and the semi-capital equipment supply chain right now, they look really strong heading into earnings season. So I'm not particularly concerned about this near-term pullback that we've seen.
Okay, so in terms of the semis themselves, I know top 10 holdings, you have quite a few semiconductor stocks in this list, including names that report this week, Taiwan Semi, ASML. And then, of course, we know there was the multi-billion-dollar CHIPS Act funding announcement to Samsung as well. So walk me through, sounds like you think this is a buying opportunity, this pullback for some of the chip makers.
Yeah, I do, because I think that the AI bull market is still really in place. We're going from a $45 billion AI chip market in 2023 to a $400 billion plus chip market for AI in 2027. And there's three data points I'd point everyone to that we've seen so far this past couple of weeks that have been very positive for the space. So number one, TSMC's March numbers, up 34% year over year. Looks like that's 2% higher than the street's estimates. So that's a good place to start. Second, Disco in Japan, 6146 is the ticker. And what we've seen there is really strong momentum in their high bandwidth memory business. They saw 35% year over year growth for their group consolidated sales, and that's a great sign for AI. And then finally, VAT in Europe, VACN is the ticker. They saw orders for their vacuum business, which goes into the semi-capital equipment ecosystem, up 73% year over year. So I think fundamentals remain very strong in the space.
Don, what do you do with Apple? There's a lot of pessimism around it. The shipment numbers for the last quarter didn't help. And yeah, you got WWDC, their developer conference coming up, and people are excited about AI, but very seldom does the market appreciate Apple announcements around technology. Only the actual shipments and profits seem to get people excited, especially when people have been down on the stock.
Well, absolutely. Look, if you look at Apple's fundamentals, I think the market share data that came out today kind of tells us something that we know already. You know, Q1, fairly weak. Q2, probably going to be weak too. And what's driving that? There's really two things. Number one is the replacement cycle elongating, right? Something that we've talked about and in the past. And then the second thing is increasing China competition. But market share data is really backward looking in nature, right? And if you could look forward, we have the WWDC announcement coming in June. And I think that's where Apple's really going to lay out their AI strategy, right? Which will probably be twofold. On the phone, on device, lightweight, large language models, effectively a super Siri assistant. And then, as well as a partnership, probably with Google Gemini, that will take the heavy large language models, right? And if you look at how Apple is really well positioned for AI, it really comes down to their hardware, software, their super high memory ability to put that into the phone, and then their chip ecosystem. But the most important thing with Apple, John, is if we see them have both a hardware and a software refresh because of AI, right? AI can drive the hardware upgrade cycle and take us away much higher from this $100 billion free cash flow number that we've been stuck out for the past few years.
All right. All right. We'll see about that. I also want to ask you finally about this rumored deal. Salesforce might buy Informatica. First of all, I'm kind of surprised that Benioff and Salesforce are out of the penalty box so soon on big acquisitions. I wonder if you think that's going to stick. And then after Alteryx got taken private to close 2023, where is the play in data? Because there seems to be, whether it's a take private or potential other types of M&A, a lot of interest here.
Yeah, absolutely. So what's happening with Salesforce Informatica? On the surface, it's actually, I think, fairly logical, right? Data is becoming increasingly imperative in an AI-focused world. Salesforce has really been pushing their data cloud strategy. I would say Salesforce has a lot of work that they have to do in terms of the integration of the product portfolios. They've made a lot of acquisitions over the years. And this just another acquisition that they would have to integrate. I actually think a stock that's underappreciated on the data side and on the AI side is SAP. So with SAP, you have an ERP refresh cycle with their S/4HANA upgrade coming. AI is going to drive more users to the cloud. That should result in revenue that's accelerating, operating margins that are expanding, and free cash flow conversion that's improving. And as well, the valuation is actually pretty reasonable, mid to high 20s earnings multiple for what I think is faster growth than Salesforce. I also think Databricks on the private side is very interesting as well.